The UK ftse 100 is almost at a record. What does this show? So today I'm going to talk about the UK's biggest stock market index, the ftse 100, and how it's almost at a record. And before doing that, go over to adamfire.com, especially if you're an expat and high net wealth individual, and see how I can help you. Now, in the last few days, and indeed few weeks, the ftse 100 has been trading at close to a record. And obviously, if somebody would have reinvested dividends, they would have easily seen a record in the ftse 100. Now, there's a number of things to look at here. The first thing is, obviously, because the pound is weak, that's helping the ftse 100. That's the first takeaway. So it's hit a record or close to a record in capital value terms in British pounds, but not in US dollars. It's a long way off its record in US dollar terms. But number two, it does show that you shouldn't base your investing strategy just on the recent past. So a lot of people looked at the ftse 100 compared to the ftse 250, and especially the US stock markets like the NASDAQ and S&P 500, and say, it's not worth it. It's not done very well recently. But the thing is, because it hasn't done so well recently, it means that it's primed for overperformance, just as some emerging markets are now primed for overperformance in the next few years because they're undervalued. Number three, it also shows that people shouldn't just focus on capital values when it comes to stocks. When it comes to real estate, people are very aware there's two ways to make money from real estate. One is from capital values and one is from dividends. When it comes to the stock market, people often forget that. So for example, the ftse 100, even though the capital value growth has been quite poor in the last 22 years, if you would have just reinvested dividends, the growth would have been actually pretty good. Still not as good as the ftse 250 or the US stock markets, but actually pretty good. Even the Japanese stock market actually recovered, adjusted for dividend reinvestment. So it isn't just about those capital value growths for a good stock market investor. And I think finally, it does show that for all the talk about net zero and oil and gas kind of being dead or whatever, which it might be long term, it also does show that actually some unfashionable or previously unfashionable stocks like oil and gas stocks have actually done pretty well in the last year or two, despite the fact that oil and gas prices aren't that high by historical standards, which kind of leads me to a final point, and that's that trends come and go. I mean, look at technology. It was super hot 1 or 2 years ago. It was super hot in the early 2000s. It's crashed numerous times in the last 20 years, but it's still done well in the last 20 years, and I expect it to do well in the next 20 years. But it's very volatile, and it goes in and out of fashion. So I wouldn't only focus on what's fashionable, because often that leads you to kind of buying high and selling low.
Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
Obviously, the best result in market right now is Adam.